Good day, traders. Gakuna Trading. Now I know that we've had a lot of you have had questions for me. A question from a trader yesterday in the Discord. He said, and I read, Gakuna, do you teach all of Stacy's concepts or just the setup you are hunting? Now this is very good. Now all of Stacy's concepts, you must hunt the setups with the concepts. Now, I don't just teach Stacy's concept. I teach what his mentors teaches. So, Stacy has mentors he learned from, put together this information and brought it out for us. So our job as traders now is to take advantage of it and return back to these mentors and see what they have to say by themselves. Because Stacy will break it down to his understanding, like I have done, broke the Al Brooks concept down, Jim Dalton's concept down, add with Stacy to understand further what Stacy is trying to say. Pump, coil, dump, coil, pump. But it has a relationship. When you read books, okay, as human beings, we want to keep learning, we want to keep advancing. We cannot sit back. We are price action traders and we must follow price action trading, not the ICT and the bullshit out there. So, price action traders are these veterans who are over 80 something years old. They call them the godfathers of price action. Now, there's something I want to bring to you guys. Now, it's in the playbook. Like I said, if you don't have the playbook, click the link in the description and get this playbook. Page 192. Now, open outside of range rejection. When a market opens beyond the previous day's range, I repeat, when a market opens beyond the previous day's range and is rejected back into the range, the potential for a dynamic price move in the direction opposite to the opening breakout is set into motion. Now, when you read this, let's look at our charts. Now, look at this market. Look at this example here. From the playbook, we all know that our failed breakout at the lows will start our day one. This market starts making higher highs. So we have day one, we have higher highs on the inside. These are all higher highs, okay? Higher highs. Okay, the market made another higher high. Okay, we are paying attention to the higher highs in the market. Okay, now within that process, like I said, Monday is day one, but can be day two of a move. Understand? Monday is day one, but can be day two of a move. Tuesday is day two, but can be day three of a move when we look for setups. Okay, market is making higher highs. Okay, now day one, day two, day three. A 3-day setup is supposed to what? Continue in the direction of the already existing build up, which we have here from low to high, or reverse. Okay, now the market breaks out of the opening range and stays broken out of the opening range. We go back to the concept from Jim Dalton. Like I said, I follow Jim Dalton and Al Brooks with Dr. Stacy Buck. Okay, no one else. I know nobody. I don't know any other thing. If you show me, I don't know what's a fair value gap. I don't know nothing. I only know what Stacy knows. That's all. I don't know anything. So I'm talking based on what I know. Like I said in my video yesterday, you need to have a specific pattern that you follow and abandon every other thing else. I know nothing. This is the only thing I know, and I've built an edge around this. Okay, now when we go back to our playbook and we read carefully, balance. When the market opens outside of the previous day's range and is accepted, conditions have changed and the market is out of balance. At this point, one of two scenarios are possible. The market will continue to drive in the direction of the breakout. Number one, the market will begin to auction back and forth. That is a consolidation to new price levels. In both cases, as long as price does not return back to the previous day's range, the market has accepted the breakout. The greatest imbalance occurs in the first scenario, when the market opens beyond the previous day's range and continues in the direction of the breakout. The movement away from value is initiative, and another time frame often move price with great speed and conviction. The range potential is unlimited in the direction of the breakout, and a trend day is usually the result. This type of open offers the greatest potential to the trader who recognizes the opportunity early and positions himself with the breakout. However, it poses great risk to the trader who attempts to go against the driving initiative auction. Now, the only thing that can stop all of you watching me is because you don't follow the rules. You have no guidelines. You jump to the screen and you make mistakes. You see three higher closes going higher. You do not know why the higher close is going higher. The closes are becoming 4, becoming 5. And we sit back and ask ourselves, what am I doing wrong? You do not know the guidelines. And many other things about Stacy. The core subject, the core topic we should be looking at. These are the basic rules. I've repeated these in many videos. Aside other things, like I said, the playbook, the link is in description. The rule book, the mentorship is still available. Get yourself a mentor, listen, and then trade with your mentor, and then you will see that your results will begin to change. Basic rules: go with the breakout from the balance. Fade or go against the failed breakout. Following a failed breakout, the odds sharply increase that the market investigates the opposite extreme of the balance. If the opposite extreme of the balance is reached, we apply the balance trading guideline. Now, when we go back to the Aussie USD today in Asia, okay, we went short, okay, in Asia, but then look at what happened. The market at the close of the Asian session put a reversal to the upside after hitting our moving average. Now, let us talk about trading with value. What does trading with value actually mean? Now, Jim Dalton states, while there may be rotational trading relative to the development of value, any counter auction trades that you place against developing value, if they are to be productive trades, should work fairly quickly. Your exit should be swift if the trade doesn't materialize. Okay, now when you listen to that, rewind this video and listen again, you would know that in a situation like this, we are counter trending. We do not want to trade against the moving average. Al Brooks has said that. ICT will not tell you that. Do not trade against the moving average, the higher time frame moving average. Do not trade against the higher time frame moving average. Even if you should counter trend on gold, this is why I said get yourself the rule book. We had a counter auction trade that got to our take profit level, which now acts as an area of what? Support to continue in the direction of that trend. All of you with the playbook, you know this concept from our rules of reversal. If you take a reversal from that level, your exit should be swift at our take profit magnet zone, because from that level the market may continue. It happened on the Euro USD, and I'm still on this trade. The trader asked me to do a video on this. Yes, I'm still on this trade because I know do not trade against the higher time frame moving average. When the market goes above, there will be a time for a counter auction trade. That counter auction trade is your level 3. Only on level 3, day 3, you have the audacity and opportunity to reverse a market. If it gets to the magnet, that market may continue in the direction of the already existing trend from the magnet. Are you in balance or are you out of balance in relation to the opening range of the sessions, which is your Asia high and low? GBP USD, I made a short, and I'll keep holding my buys because the criteria for short are not met and it's not clear. So this market will keep going up. I know traders tried to take a short trade yesterday, but unfortunately, when you have the rule book, with the rule book, Gakuna's rule book, you would avoid things like this because the rule book should be open to one side of your screen while you trade. Also, let us take a look at the screener. What the screener have to say about this day on GBP USD? Like I said, the screener helps you learn. The screener is not there for you to take trades. The screener is for you to learn. If you look at GBP USD on the screener, it shows 3-day longs and 3-day setup. Why? Why is it showing? Your question is why. And when you see it signal like this on your screen, the next thing I expect you to do as traders is to mark up your charts. Day 1 inside the FGD, day 2, day 3. If day 3 high is broken out of 3 days of longs, 3 days of longs triggered into the market, 3 days of longs is showing a 3-day setup. Why is it showing a 3-day setup? In a new week, we have a new low of week. The low of week becomes day 1. So day 1, day 2, and day 3, breaking out of previous day's high. That is why the screener is showing you what you have there. GBP USD. Did you see a closing breakout? No, they did not close in breakout. Other markets you see here, they all closed in breakout. What you see, CIB, they all closed in breakout. Euro JPY, 3 days of short, 3-day setups, they kept going down. So your screener is to help you understand the day count. Okay? It helps you understand the day count. The day count is the only way to take the best trades ever. May the markets go with you. I hope this gives you value. The link to the playbooks, the mentorship is in the description. Thank you for watching and liking and sharing. And may the markets go with you. I'll do more videos like this on the screener, how to use the screener. The screener is the best thing ever I have ever developed. It is a machine to screen the market. Now I know most of you love oil, right? Now I have oil there. Now look at what oil is doing. Now look at the screener, look at oil. The market has screened oil. My indicator has screened oil. What do they say? 3-day short and 3-day setup together. Did they close in breakout? Yes. So it's showing a closing breakout. So we have a closing breakout. CIB. So with the screener, the only thing you need now is your rule book. With the screener, the only thing you need is the rule book. You need to get the rule book. The rule book together with the screener helps us execute trades because the rules for continuations and reversals are there. Day 2. So you see how this screener works. It's giving us day 3. Guess what? The market broke out again on this day. So we have 3 days of shorts. Making lower lows. Okay, so we have 3 days of short. The rules for reversal is not met, and that rule is in the rule book. Day 1, day 2, day 3, it breaks out again, 3 days of short. The screener is guiding you. For newbies, if you're a newbie and you're watching this video, you need the screener to help you learn. Whenever you see them present 3-day short, 3-day setup, mark up your chart and use the rule book. The rule book cements everything for you. For entry, exit, take profit levels, first red day, first green day, everything you need. Okay, May the markets do with you 1% better every single day. See you guys in the next one. Thank you.